This John Lothian News video is sponsored by In the managed future space, it's often difficult to match small CTAs with large institutional investors. John Lothian News spoke with Mike Dubin of Silvercrest Asset Management about his firm's new fund that bridges the gap between smaller funds and large investors.
There's a growing interest in the kinds of returns that are possible in the emerging sector, either smaller managers or newer managers. Been a lot of research to show that maybe somewhere between 2 and 4% per annum outperformance of the smaller managers. They have a larger space that they can play in. Their opportunity set's stronger. They're more nimble. They can handle the environment better. And the institutions have shown a strong interest. So I think one of the problems for the smaller managers is that there's more business risk, and they're harder to identify. So the institutions, while being interested in allocating in that sector, have a problem. They just don't know how to identify and do all the due diligence that's necessary. We're committed to the extent we're trying to form a new product that would combine a portfolio of the smaller managers, but force them to go through a kind of a proctology exam of sorts on the operational side to take away some of the business risk issues. So we've got a very strong portfolio of 15 managers. We're seeking an initial $50 million to get this thing up and running, where all of them are going to be put through a very extensive due diligence. One of the interesting things about smaller managers is that many of them grown up together as a team, and they have a great deal of trust in each other. But when it comes to separation of duties and the kind of things that they should be implementing structurally, if they were to become larger funds, they're not doing it early on. And some of these operational due diligence reviews can help them with the feedback loops, so things they ought to be doing.